What's up, traders? Welcome to an educational video brought to you by Monster Money Trading. Today we'll be talking about technical analysis, everything you need to know about technical analysis. And I'm serious, everything. I want to keep it as simple as possible for you guys. You asked me for more content, so here it is. I want to provide as much value as possible. Like I say, keep it simple. So let's get into it. Are you tired of trying to memorize hundreds of patterns? I'm telling you guys to forget the crazy Instagram patterns. I know you've all seen it on your explore page. All these mumbo jumbo, head and shoulders, wedges. I played some golf today. Those are the only wedges I use. All of these wedges you see here, bunch of nonsense. Alright? In this video, we will be covering core concepts on how price moves. First things first, fundamentals. Alright? You may be asking me, isn't this about technical analysis? There are some things I need you guys to understand, alright? I'm trying to develop a base here for you. I'm trying to develop a base of knowledge. So, we cannot just address technical analysis without talking about fundamentals, because at the end of the day, fundamentals are what's driving the markets. So, we need to understand why price is moving a certain way is because of fundamental reasons. What's going on in the economy, monetary policy, events such as COVID, war, and so on. The reasons we are able to identify patterns on the chart are these constantly repeating fundamental factors, as well as human nature, as we all know, fear and greed, and people don't change. Alright? We can see that in the stock market. We can see throughout this year with interest rates being increased, we've seen a sell-off in the stock market, yet we have such delusional rallies in price, and that is driven by greed. Technical analysis for retail traders. At the end of the day, we are all retail traders. Whether you trade like the bank or whatever strategy you use, we are all retail traders. I'm a retail trader, and any trader you see on Instagram is most probably a retail trader. Technical analysis helps us identify how price is moving, and it is extremely important to combine both technical analysis as well as the fundamentals. Price does not move. Listen to this, alright? This is important. You guys need to understand. Price does not move based on lines on a chart, indicators, etc. Price moves based on order flow. Order flow being buy and sell orders coming into the market. Relying on patterns alone will result in a random outcome. Candlestick charts and the lines we draw on our charts are simply a visual representation of order flow, and as retail traders, we are lucky enough to use these resources to our advantage. Diving a little bit deeper into technical analysis and how we can go about it. First thing I want you guys to focus on is market structure and trends. Understanding market structure and how trends form will help you to identify market direction and higher probability trades. Right here, alright, just doing simple visual representations here, we have an uptrend or bullish trend, alright, price is moving up. Right here we have a downtrend, same story, price is moving down, trending down. Then we dive a little bit deeper, and now we start to break down the structure of these trends, alright. So in a bullish trend, we are forming higher highs. As you can see, price is moving up here, forming a high. We are then forming a higher low, because this low right here is higher than the previous low. Alright, simple enough. And then we move up, form a new high, a higher high. And then price, because price trends and doesn't move in one direction, alright, we will see pullbacks in price. And we'll see this higher low formed. So this low right here in price is higher than this previous low, so we call it a higher low. Now with the bearish trend, alright, we have the inverse of that. So we have lower lows, lower highs. You can see this high, it's lower than the previous. Lower lows, lower highs. Alright, simple enough. Alright, so this is the basics. This is the structure of the market. So when we see higher highs forming and higher lows forming, we know that this is bullish market structure. When we see lower highs forming and lower lows forming, we know that this is bearish market structure. Alright. A little bit more of a realistic example, but still an illustration. I want to show you guys something very important here. Alright. So, as you can see here, price is moving up. This is an uptrend. But you can see here, alright, we've got this formation almost like a head and shoulders. So this is something you guys need to understand. These patterns without confluence will not play out. Alright? I know this is just a drawing, but go and look in a chart. You will see head and shoulders fail. You will see double tops fail. Alright? You need to be building confluence. What is the higher time frame telling you? How is the higher time frame trending? What is the lower time frame doing? Alright? So as long as we are respecting this bullish market structure, here we have our higher low. Alright, we create higher highs. Price pulls back, we create a higher low, and price is respecting these higher lows, respecting previous higher lows, respecting bullish market structure. Alright, so even though we get this double top bearish confirmation, price never comes down and breaks this previous market structure, this bearish bullish market structure. So until we see price come down and start to break some of this previous bullish market structure, right? We got these previous higher lows, until we start to break some of these levels, because now we're making lower lows, right? You guys starting to catch on. Now we are forming lower lows. Okay, we can still pull back into this previous bullish structure and still go up. So this is why, like I say, you need to build confidence, but I don't want to overcomplicate it. Right now we're forming lower lows, and then price, like I say, price trends. We don't move in one direction, so you will see pullbacks. And then we are forming a lower high. And now as we start to form lower lows, alright, this is a confirmation that we are having a shift in market structure. We are shifting from this previous bullish market structure to now bearish. And now, just another example, alright, you see this previous lower high, price can come back up and retest this level. We can even come back up a little bit higher, as long as we're not breaking these previous highs, alright. We could now consider that price is bearish, since we've made two new lows. So this little move here, you could consider a fake out or a double top. But overall, we are respecting this bearish market structure. A little bit of a funky illustration, but I want to give you guys something that you're not going to see on Instagram, because the charts in real life are not these straightforward illustrations. All right. Moving on to the next thing. Step 2. Support and resistance. Now, support and resistance, we have a lot of different names for this. Key levels, supply and demand, liquidity zones, all essentially are the same thing. Retail traders like to sound fancy, but I've always got away with simple support and resistance. All right. Key levels, I also like to refer to them as key levels. Now, if you have a look on the chart, we can see in this bullish trend, this uptrend, all right, price comes up to a level, reacts here. Okay, resistance we can refer to as a ceiling. Okay, price is bouncing off of the ceiling, as if you threw a bouncy ball at the ceiling. It's bouncing down. Now we have formed resistance right there. All right, we pull back, and then we are bouncing off of a floor now. So this is a support. A support you could refer to as a floor, or compared to a floor. So now you see your bouncing ball is bouncing off the floor, and this is a support. Come up, great resistance. All right, and then you can see here this previous resistance is now acting like a support. So this is something we see. All right, so resistance can turn into support, and you can see that overall this is a key level where price is reacting to multiple times. So we can see, okay, we had this previous resistance. As we see price forming here, all right, as we come down into this previous level of resistance, since we are uptrending, this would be a great area to start looking for buys, all right. And then as we're breaking these previous highs, you could potentially have further buys above there. Very simple illustration of support and resistance. Clean traffic, all right. So I'll need to dive a bit deeper into a real chart, and we can actually have a look at some of these representations in real life. Another thing is ranges. All right, I forgot to speak about ranges actually. So let's go back to the chart and have a look at a range. All right, from this representation, we had a range right here where for a period of time, price was moving sideways. Right here we had a range. For a period of time, price was moving sideways. So on your lower time frames, there was no clear direction in these periods of time. Right here. If I asked you, are we trending up or are we trending down? You would not be able to give me a clear answer because we are ranging between two key areas in price. So price is moving sideways here. So ranges, you want to stay out of ranges. And this is why I want to get into the clean traffic, because this is something very important, I feel, and this is something I use on my stream with my trades. I feel these are the highest probability trades, and it's just another tool you can have in your arsenal. This is what I look for my highest probability trades. All right. So not all ranges will allow for high quality trades. Understanding which ranges will produce the highest probable setups helps us avoid lower quality trades, as well as helping us identify when not to be taking trades. That is super, super important. Not every day is going to be a trading day. Not every day is going to have the best trading conditions. And those are the days you want to stay out. So if you can identify, okay, price is in a range here. Is it worth putting money on the line, making a prediction in which direction price will go when direction is not clear? Absolutely not. Absolutely not. All right. So I want to give you an example of what a clean range may look like. I haven't prepped this, so give me a second. But right here, Okay, right here. We were moving bearish here on GJ. Okay. We formed a support right over here. And when price broke through the support, we came down all this way. And then later on, we formed a resistance right here. So now if you're looking within this range, alright, there's no other levels of support or resistance. You don't see another level of support here. You don't see another level of resistance here. Okay, this is clean traffic. This is what I mean when I say clean traffic. This candle right here is clean. There's nothing stopping price from moving. There was no area where price reacted to. Okay, so this has now created a clean range for price to fill if we ever come back into this range. You can see we traded below this area for a period of time. And when we came back into this range, alright, look at this. Look how clean this move is. Alright, price is just mirroring exactly what happened on the other side of this range. Alright, clean traffic. So when you get a messy area in price where it's difficult to distinguish where's my support, where's my resistance, right here for instance. I'd say you got resistance right there and you got support right there. I'm focusing on this range right here. If price were trading in this range particularly, alright, direction is somewhat unclear. We're waiting for a break to the upside or a break to the downside. Because here, I'd say that this traffic is relatively clean. And then here, this is beautiful. Alright. And we can see, once price broke out of this funky little range here, how perfectly we came down to fill this range. Okay. So we had clean traffic to the left here, and price just mirrored this. So that's what I mean when I say clean ranges. You don't want to be fighting the market when we are sitting in consolidation, when there is no clear direction. So wait for your breakout, wait for price to break into these clear areas of traffic. Right here, another example. Okay, so this range was messy for a period of time. But if we ignore all of this and we look at most recent price action, look at these candles before they left the range. They left us nice clean traffic to fill. So you can see right here, we were experiencing more consolidation. And then once we broke above this range, alright, look how nice and clean price moved up and filled this previous clean range or clean traffic, or mirrored these previous candles to the left. So you want to wait for price to break out of these areas. Why would you want to be taking trades in this? It's horrible. Look at this. Alright, you want these nice clean moves. Now they're not always going to be there, and that's fine, because as traders, we don't need to always be taking trades to make money. Alright, we simply need to wait for our setups to come to us. We need to be waiting for the highest probability trades. Excuse me. This drawing is giving me issues here. Alright, so just a little bit of what I look at here when I talk about clean traffic. These are the ranges I'm trying to take advantage of, as I feel price has the highest probability of moving to my targets within that range. Alright, so I think we've gone over some really important stuff here, especially for beginners. And yeah, like I say, guys need to understand fundamentals are the driving factor in the market. Order flow is based off fundamentals and human psychology. These days, we also have algos running the market, so algos pumping orders into the market. But these orders are still based on fundamental factors. So we have news come out, and these algos will adjust their order flow based off of how this news is coming out, based off of human psychology. And understand technical analysis is simply a tool for us retail traders to visualize order flow, visualize orders coming in and out of the market. Alright, so keep it simple. Forget indicators. Like I say, price does not react to indicators, it's reacting to order flow, fundamentals. These big hedge funds are not sitting with a RSI, they're not sitting with moving averages, they're not sitting with a MACD. Alright, they're making orders based on what is going on in the economy. All these funny patterns are made up by other retail traders. All these head and shoulders, wedges, whatever. Alright, I've heard it all. You are better off learning the core concepts of how price moves. So I want you guys to focus on trends, identifying these trends in a live market, market structure, key levels, and combine that with fundamental analysis. Alright. Thank you so much for watching, guys. I appreciate your time, and I'll see you on the streams. Safe trading, everybody.